There's been a lot of chatter about small cap stocks over the last week. Somebody that wants to ride the emotional coattails for a little while in some small caps, have at it, just be really careful. Other than that, holding on to small caps for 3 reasons I would be very, very weary of. First of all here, as of yesterday's close, 82% of small caps are 10 to 14% below their 52-week high. So 82% of small caps are in a really, really nice correction. 70% of small caps are either almost in a bear market or in a bear market. So when I'm a buyer, I want to buy companies that are making more and more money, have more and more profits, more and more revenues. Small caps is not where that's at. Be very careful. The second reason is, one of the reasons why small caps have outperformed in the last week, week and a half, is the thought or the wish of lower interest rates this year is driving up the small caps, because small cap stocks are more reliant on borrowing costs to fund their business, to keep it going for their cash flows. Well, even after today, the Fed meeting minutes today that came out at 2 o'clock Eastern time, compared to last week, the thinking on the street now compared to last week is that there won't be as many cuts, or they won't even be as likely. So I think that can continue. Be very careful. But if the likelihood of rate cuts this year declines, small cap stocks will decline, so be very careful. The third reason, real quick, is for 2.5 years, I've been bringing you these little news stories from time to time where people really, really like small caps, and I have been saying, I'd be really careful for 2.5 years, and I've been right. So just be careful. In my TikTok feed, I'm getting the question a lot, John, do you think this is a bear market or a bull market? Well, let's look at the facts. I showed you the small cap stuff. Let's look at the S&P 500. Well, as of yesterday's close, 57% of S&P 500 companies were in a really nice correction, down anywhere between 10 and 14%. 57, more than half the S&P 500 companies. As of yesterday's close, 40% of S&P 500 companies either very close to being in a bear market or actually in a bear market. So what do you think? The NASDAQ 100 data is relatively similar. As of yesterday's close, 55% of NASDAQ 100 companies were in a really nice correction, down anywhere between 10 to 14% off of their 52-week highs. 40% of NASDAQ 100 companies were down anywhere between 15 to 19% off of their highs, 31% in a bear market. What do you think? Do you think this is strength or weakness? According to the chart, which everybody sees, there's a lot of strength out there. Now, that's because here on the NASDAQ 100, QQQ, about 10 companies, Mag 7 Plus, these 10 companies direct 50%, half of all of the weighted movement in the NASDAQ 100. So it is very, very skewed towards the results of only 10 companies, essentially the Mag 7 Plus. The breakdown is very similar for the S&P 500, with almost all of the same companies being very heavily weighted, although the Mag 7 Plus here in the S&P 500 controlling not quite 36% of the overall index. So with that said, the small caps remain in a bear market. The S&P 500 and NASDAQ 100 in their totality aren't that hot, and they're being controlled by the Mag 7 Plus. So if you're going to be a buyer, if you're going to hold these companies, you want to be, in my opinion, you want to be in strength. So be looking at these companies. Myself specifically, I'm not a big fan of Apple. Their revenues and profits have been really flat for quite some time. I want to put my money towards a company that has increasing revenues and increasing profits. Personally, I will probably also stay away from Tesla. I don't like the way that Musk is continues to get away from running Tesla. And this third great fight that he's in with Trump about this and that and the other thing, I don't like it. It takes away from the company and people are getting scared. So personally, I'm going to stay away from Apple and Tesla. But otherwise, I really like these other companies. I'm not a buyer yet. I actually unwound some of my short positions today, and I do still hold 1/4 of my short positions. Yes, of course, the shorts I sold today lost money. They were underwater. I am looking at the S&P 500 here as an example. Very interesting because we have chopped sideways for a little while now. There is a new possible demand level that it would have to break down to get further down. Much further down from here at about 1,888. In my opinion, that next level down, as I have shared with you in the past, around 6,091. So the consolidation is continuing. I got out of my short positions, not only because, of course, are they underwater, but just grinding here and going sideways, it kills premium. And I just said, okay, time to get out of some more of those. In a perfect world, and maybe I don't get the perfect world scenario, but in a perfect world, I really, really don't want to be a buyer until we do get some lower prices, and maybe it doesn't happen. Maybe we grind sideways, and that is all of kind of the relief we get, and maybe the rally then does continue. If and when I am a buyer, I need to be very careful of not using too much leverage, maybe no leverage at all, because again, with the immediate and medium-term underlying swings between happiness and fear at exuberance, at any minute we could get a sell-off. It is still absolutely possible. I hope it happens, but we don't have to get it. Boy, natural gas down big today. This is bad for my long natural gas position. News stories came out today about how we could have a more mild summer and that those inventories were building. That's not good. That sent prices lower, at least as of about 2:20 in the afternoon, confirming the breakdown below $3.37 a cubic foot. I got out of half of my positions, yes, at a little loss. I did keep half because being so big down today, anything can happen, but there's a chance that today's selling could be a little overdone. Maybe we get a little pop-up tomorrow. Let's see. Maybe I get the chance to get out tomorrow at a better price. No promises. Watch these levels. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.